Did you know this year almost 60% of homeowners used a mortgage broker to arrange a home loan?
Today we're going to take you through 9 tips to find the best mortgage broker,
including one bonus tip to make sure your home loan application doesn't risk getting declined.
Let's dive right in.
Oh, whoa.
Before we get started today, if you like today's video, then like and subscribe. Today we're going to take you through 9 steps to finding the best mortgage broker for you. So tip number 1 is researching the mortgage broker online.
Yeah, that's right, Nathan. There's so many great tools and resources online that can help you quickly vet a good mortgage broker from one that isn't great. So even if you've asked your friends and family who to use, it's still worth doing a bit of independent research online.
So some quick easy tips here to research your mortgage broker online is using Google reviews, Facebook reviews, and product reviews, all of which will give you a good understanding and background of what other people's experience has been.
With the reviews, I recommend having a quick read just to check that they're not fake and to find out what sort of customers that they're dealing with. Are they dealing with lots of first home buyers, which you might be? Or if you're an investor or looking to refinance, have a look at the types of people that have helped out before, because some mortgage brokers do specialize in different areas and you want to make sure you're getting the right fit when you choose that mortgage broker.
Also, it doesn't hurt to check their website and see what sort of content they have on there, and also doing a Google search on the broker's name just to see what comes up.
What comes up when you Google search your name?
Tip number 2 is to determine your mortgage broker's experience.
In finance, experience counts for everything. It can be the difference between getting your loan approved and getting your mortgage declined. The broker's experience can really help you even get your stuff happening quicker, and they might be able to recognize upfront if you're going to have an issue or any potential problems with your home loan application down the line.
It's worth asking your mortgage broker how many years experience they have in the industry, what their background was before. So if they're a baker or candlestick maker before and then they became a broker, well, there might not be much of an alignment to that, and you've got to be a little bit careful there in understanding why you should use their services and what experiences they have around your particular scenario that is a fit for them.
Yeah, the reality is you can become a mortgage broker with pretty much no finance experience. There is a whole mentoring program involved in becoming a fully fledged broker, but the reality is you could be dealing with someone that's been in the job for 2 days and you don't want to take the risk on your potential future home. What are a couple of questions you potentially ask them, Nathan, on their experience?
So a few good questions here are, what did you do before being a mortgage broker? Do you own a property yourself? And have you got a home loan? How many properties do you own? What type of home loan customers do you typically help? How many home loan customers do you help per week?
Yeah, and why you would ask that last question is because some mortgage brokers work part-time, which is fine and you're allowed to have flexibility, but if they haven't dealt with a particular bank in over 12 months, policies and processes change. And you don't want to be buying a home, be subject to finance, have pressure, and you don't want to have a situation where you've signed a contract, you've got timeline deadlines to hit, and the broker's getting you to fill out old forms, or they might have changed your policy and not accept your type of income.
Tip number 3 is to ask the mortgage broker their credentials.
So in Australia, to be a mortgage broker, you have to belong to either the MFAA or the FBAA. It's just standard. But you also want to find out if they're registered through ASIC and even ask if they've won any awards or certain accolades in the industry.
The other thing you want to understand is which banks they're accredited with, because not all banks will accredit all brokers, particularly if they haven't used that bank for a long period of time. The bank will actually withdraw their accreditation. So if you're dealing with a broker that doesn't have many banks on their panel and they're doing a comparison and you're missing out on a large portion of the market, well then it means that you're not getting as much choice.
Yeah, practically speaking, while some brokers might have access to 30 lenders, they might only actually be able to put your application to 3 of them. So you want to make sure you've got that extra choice by asking the mortgage broker this up front.
Tip number 4 is to find out their home loan researching process.
A lot of new to industry mortgage brokers just rely on their aggregator software. So that's pretty much a computer program that they get given, they'll put in how much you're looking at borrowing and the purchase price, and it'll spit out some interest rates. It's similar to a lot of the online services you see, but this is only the start.
Now, the biggest problem with this strategy is looking at the rate, and the rate alone can cause a lot of issues. Banks all have different credit criteria and requirements that need to be met in order to get a loan. So going for a bank just on rate is problematic in itself. So you want to understand how the broker determines which lenders are right for you, how they got to the rate in which they've offered you, and whether or not you do qualify with the credit criteria. Because it's all well and good to go with Bank A because they've got the best rate on the market, but if they don't like your casual income or your minimal deposit or anything else,
or the type of property,
exactly right, you're going to get declined and get a bad outcome. So how you can tell whether or not a broker has a good process in which they find the right loan for you is whether or not if you've given them paperwork upfront before your actual meeting, because what you want them to be doing is 2 or 3 days before you catch up, they have all your pay slips, all your bank statements, and they're reading through it, understanding it, talking to other banks that can help and making sure that you qualify. If you've got a broker just saying, let's go with this bank because they've got a great rate, but they've not seen your pay slips or your bank statements yet, alarm bells should be ringing, because this might be a high chance that you might get declined for fact of, as I said, employment circumstances, deposit, the property. There's a number of things that the banks can look at and say, no, we're actually not interested. So be careful of that. The best practice is if your broker asks for the paperwork upfront, is researching before they make the options. That's an absolute must. Tip number 5 is question their turnaround times.
Yeah, so you want to question the mortgage broker on how fast they can turn around your pre-approval or your home loan application. Why?
The turnaround times are important because you don't want to be putting down a contract if you've got a 14-day finance clause and your broker's going away for 2 weeks and they're the only one that you're going to be able to contact. So understanding what their processes are around, the turnaround times, how quick they're going to be able to process your application. Do they have any support staff? Because if it's just them and they're getting sick or going away and you don't have anyone else to contact, it is quite a stressful process to be trying to get your loan approved in a timely manner when you don't have contact to anyone else.
Yeah, a common one at the moment, Nathan, is people going to auction. So you might be going to auction in a week's time, and if you're applying through a bank like ANZ or some of the majors and they have a promotion on, they might take 3 weeks to get your application approved. So you need to factor that in up front, because again, it goes back to if it's a cheap rate, it might not be the best fit necessarily for you if you're gonna miss out on the property.
Tip number 6 is understand their mortgage approval and rejection rates.
Yeah, so Digital Finance Analysis surveyed over 52,000 households earlier in the year, and they found out that almost 40% of mortgage applications were getting knocked back or rejected by the banks for various reasons. Valuations, budget, living expenses, lots of things. So you don't want to be one of those 4 in 10 people that gets knocked back by the bank. You want to deal with a mortgage broker that has a high approval rate and a very low rejection rate.
Now, how you can find this out directly from the broker is a bit challenging, but once again, it goes back to understanding their process. If they're getting your paperwork upfront and they're looking at all your details of your expenses, your income, the property that you're going to be buying or the properties that you're looking at, they have a pretty high chance of getting it right because they've done all the research upfront. It means that you're applying with a bank that you actually fit with. Now, in this environment, it can be tempting for a broker and even an applicant to run at a solution and go with the bank that makes the most sense. In our experience, slow is fast, so make sure that the broker slows down the process and does a lot more research upfront before you pick the bank.
Yeah, Nathan, in other words, you only get one chance at making a good impression with the banks. Tip number 7 is question the mortgage broker's fees and how they get paid.
Traditionally, mortgage brokers get paid by the banks and charge no costs to the consumer.
So ask your mortgage broker upfront if they're going to charge you any fees or if it's all paid for by the lender. At least it's nice and transparent, and they should be telling you that anyway, and you know what you're in for upfront. Tip number 8 is prepare a few questions to ask. Now, easy just to get in the appointment and not really know what you're doing and try and be led by the mortgage broker, but it's also good knowing how they can add a bit of value and how they can help in your situation.
So questions to ask are things like, what will my credit cards have as an impact on my application? Have you checked my credit file? Is my credit file all good? And if you're going to be doing an application, is it only going to be with one lender? Because at the end of the day, you don't want to be affecting your credit file by doing an application here, there, and everywhere. Tip number 9 is don't risk being declined. In this market, as Jayden said earlier, the rejection rate of the banks is at an all-time high. There's more reasons for the bank to say no around your expense summary, around your income, around even the property or deposit you've got. So make sure that your broker follows a set process, has a researching arm that they can rely on and get it right so that you can ensure that you're going to get the best result possible.
So that's it for today, guys. Hope you enjoyed the video. If you did, like and subscribe below or leave a comment. If you need help with your mortgage, make sure you hit us up at huntergalloway.com.au.